looking at what is included for supplemental, I think the two big things we talked about was retroactive pay and, oh my gosh, I know this.
Is vacation pay considered?
No. Bonuses are, sorry, I'm really scattered today. If you get retroactive pay or you get a bonus, that's absolutely a supplemental wages. Those are the two big examples in severance pay. And there's different ways to handle supplemental wages. And it depends upon the company. And you can do it any way you want as long as you apply consistently. Some companies will just do a flat 25% withholding. So that's actually what the university does. So when we get our retroactive pay from what we were supposed to be getting from a year ago last July, they'll take a flat 25% for fit and 3% for sit. Now, is that a good thing or a bad thing?
Could be a bad thing if you didn't put that at minimum tax level.
Yeah, it depends. I mean, if I'm married to an orthopedic surgeon and we're in the 39.6% tax bracket, they way under withheld on me. But if I'm, me, and I'm, single and whatever, and I'm in the 15% bracket, they've held out way too much and I have to wait till the end of the year to file my tax return to get a refund, right? So it's not good for anybody that's not exactly in the 25% highest marginal tax bracket. So that's one way they can do it. Or they can just take it and add it to your regular paycheck and then go to the tax tables. And without getting too deep into the woods here, that can also be not beneficial to the employee because say that I make $1,000 a week. So $52,000 a year, I'd be in the highest marginal tax bracket of 15%, right? And then say in 1 week, I get my quarterly bonus and it's $4,000. If you just plug it into the software like that, the software is going to go in and pull the number as if I made, what is that, 110,000, or no. $260,000 a year, which is going to, then I'm going to be in like the 28 or 31% bracket. It's going to pull way too much. So that can or cannot be beneficial as well. And then it's also saying that you can, with your fringe benefits, something like a country club membership, they can do whatever they want with it. Say that they pay for me to belong to Missoula Country Club, and that's $2,000 a year. They can throw it on one paycheck, or they can split it up over 52 or 4. So, I mean, it's very interesting to understand how these dynamics work, and if you're budgeting as an employee, how one paycheck might get hit with a lot of FIT withholding. Yeah, they put $2,000 worth of country club fringe benefits on one paycheck.
If the country club membership is paid for business reasons, is it still taxed to the employees?
So it depends upon the allocation between business and personal. So if they buy me Lakers tickets, season Lakers tickets, that's going to be allocated between business and personal, because I'm probably not taking somebody to how many games they play at home, 40 games or something, right? But if they just buy me one set of tickets because some clients are in town for the weekend, that's not taxable. Same thing with the country club.
If you have like a membership to a country club and they're paying for it,
And you sometimes entertain for business there.
and sometimes don't use that.
And sometimes,
And don't use it unless it's for business.
then that's another good question. You would probably need to document that and petition to have it not allocated to your W-2. In other words, I would never, ever, ever in any situation go to the country club or let my kids go swimming there or my husband go hang out with his buddies there. We would have no use for it other than strictly the 4 times a year that I go golfing with clients. I think if you could document that, you could probably petition not to have it included. Most of these fringe benefits have a high propensity for personal use, and that's what the IRS is after. If I give you a car and say this is a work car, you're probably also going to drive it for fun. If I give you a country club membership, you're probably also going to sometimes use it. Okay, tips. One more time, we visited this a whole bunch of times, but let's talk about it yet again. Federal income tax is taken out of your tips. You report your tips, right? And then what happens if you don't report at least 8%?
They get allocated, they take 8% of total sales and subtract it, report it, and then you're responsible for the taxes on the rest of that 8%.
Yeah. So Don, what's your understanding? If I've got these reported tips, say, oh, I don't know, $800, and they pull my till for the week, and I sold $15,000 worth of alcohol, how are they going to calculate my allocated tips? So I reported this, and these were my sales. Yeah. Have I reported enough? No. How did you get that?
The allocated was the difference from 8%.
Okay, so how much?
30% of that should have been
Right, here's what I should have reported. I only reported 800, so my allocated are 400. Which of those numbers, Rose, are they gonna withhold FIT on? Federal income tax, sorry, speaking in acronyms. Are they gonna withhold out of my paycheck on this number? Yeah, they're gonna withhold that on this. Okay, Shelley, where did they get their taxes on the other $400?
The $400 will show up on your W-200 allocated too.
Yeah, exactly. Okay, Haley, is this also taxable for FICA?
Yes.
Yeah. Is the 400 taxable for FICA?
Yes.
Both shares or just one?
Go on.
Yeah, it's just the employee, isn't it? You never get the employer share of that. We've talked about these so many times, but they're just wonky. Tips are tough. Okay, so everybody understands the difference between allocated, reported, and fit and FICA, right? Okay, that's what I just said. Traveling expenses, this is a special area. Traveling expenses is when I go out on behalf of my employer and I spend some of my money, right? Traveling, I've got my credit card, and then I pay for it. The one question you have to ask them is what's down here in italics is, do you have an accountable plan or a non-accountable plan? So say that I work for MDI, right? I travel around and I sell MRI machines. So I go to my employer and I say, here's my receipts for last month. I spent $2,896.42 travel, right? Do you have an accountable plan or a non-accountable plan? If they have an accountable plan, stick with me here. They are going to cut me a check, right? Under accountable plan to reimburse me. And this is not going to show up on my W-2. And I'm not going to write it off on my tax return as an employee business expense. So it just doesn't show up anywhere, which it shouldn't, because it's not revenue to me, and it's not really an expense to me because they cut me a check. But if they don't have any plan in place, and a plan is just a one-page piece of paper that's signed off by the corporate board that states that you've got to return your receipts within 30 days. They have to be bona fide receipts. You have to document there was a business reason for incurring those expenses. In other words, like basic compliance stuff, right? If they do that, no sweat. If they don't do it, or if they don't have one, This amount of money shows up on my W-2, and they have to withhold federal income tax on it. Then I get a write-off on my tax return, and without getting too deep, it's called employee business expenses. But I may or may not really get that because you have to itemize your deductions to get them. Maybe you've heard what that is if you got a finance class, but not everybody itemizes deductions, just leave it at that. And even if you do itemize your deductions, these particular expenses are phased out by 2% of whatever your adjusted gross income is, so that the government doesn't let you take all of them. So long and short of it is you really kind of get screwed if they don't have an accountable plan. So if you're ever in that situation, the first thing you want to ask your employer is, hey, do you have an accountable plan? And if they don't, just go to any one of these document websites that will draft, a free will or a free estate planning kit or a free accountable plan, and fill in the blanks and print it off and have the corporate board verify that you have an IRC compliant plan, Internal Revenue Code compliant plan. So that's all there is to say about that.
I got a question on that.
Yeah.
If it's not a normal plan, it's for you to report wages, then can the company still write that off on their taxes?
They do, it just shows up in a line item associated with gross payroll rather than a line item called, travel reimbursement. So 6.5 doesn't have another to that. But also then they've got to pay payroll taxes on this, don't they? So it's not good for anybody. Okay, what's exempt from FIT? Ministers' wages and salaries. Advances. You come to me and you're an employee and you're like, oh my God, the transmission just went out on my rig. Can you give me $3,000 full on the next year of my salary and I'll pay you back $280 a month? And I say, sure. Great employee, you gotta get to work. You don't have money for a transmission, you got traffic credit. Here you go. That's not taxable because I'm just gonna pull that back out of your paychecks. Educational assistance, we've already talked about that, but maintains or improves your current job status. It can't qualify you to do something else. Moving expense reimbursements, we've talked about that. And transportation, this is relatively new. If your employer can provide you up to $255 a month in passes that allow you to get to and from work in something other than a single passenger vehicle. And that's tax free.
Would that be like a bus or?
Bus, rail, if you carpool so that you go in the fast lanes in the city. There's a certain amount that can be used for bicycle expenses if you're a biker. Anything that gets you to and from work that's not single passenger vehicle. And then there's a chart on that. Okay, this is kind of hairy, so stick with me here. You guys, I need your attention in your class. I'm not sure what you're working on, but we're up here. Okay, if you have pre-tax salary reductions, those are exempt from this. What am I talking about? What's an example of a pre-tax salary reduction?
The cafeteria plans or what's that in?
What is a cafeteria plan?
Money that you're putting into a plan that you're able to pay for non-covered expenses like medical or.
Yeah. This is a big deal. Stick with me here because the numbers are a little, not tricky, but there's multiple steps. Okay, so what's happening is I say to my boss, first off, no, my boss says to me, we just established a flex plan, okay, for a cafeteria plan. And everybody needs to determine how much you're going to put into it, okay? Let's deal with the FSA. The maximum you can put in a year, these numbers have just changed. What is this? $25.50. The maximum you can put in is $25.50 a year. These dollars, so what's going to happen, so let's just take a nice even number. Say that I decide to take out $2,400 a year to my flex plan. I elect $2,400. And I'm paid once a month. They're going to take $200 a month out of my paycheck. Where's that gonna go? That money is gonna go to a trustee. And in Missoula, the company that handles most of the flex spending accounts is Allegiance Benefits. But it doesn't have to be. You can self-administer, you can choose an out-of-town or out-of-state trustee, but let's just call it trustee. The trustee holds on to that money until the employee submits a receipt that shows that they spent that money on a bona fide medical expense, or dental, or optical, pharmaceutical.
So hospitals don't have a debit card or
They can, yep. Receipt slash debit card transaction, but even with a debit card transaction, you're gonna have to submit a JPEG of your receipt. And then they give you the money back out. Why is this a beneficial thing? No taxes on that money. So if I have a $200 pharmaceutical bill, I earn $200, I get $200, I pay my pharmaceutical bill with it. Versus, I earn $200, I pay 30% in taxes, I get $140, that's not gonna cover my $200 medicine bill. Right? I really gotta earn, whatever, you would gross it up, let's say, around $280. Times point, what did I just say, 30%? These numbers aren't exactly right. But, to get close to the $200 that I need to pay, right? Because this is going to taxes. This allows me to earn $1 and pull $1. There's no other vehicle or instrument that I know of that is completely tax-free.
So,
You pay no FIT, you pay no SIT, you pay no FICA, nothing. Okay, so,
sorry, I wasn't-
no, these are all great questions, and this really is, you guys, this is the crux of how complex payroll has gotten. I hear every year from tax clients, bitch, Mom, how much your tax return is, how much my bill goes up every year. It's just getting more complicated. It takes longer. There's more to look at, more to think about, more planning to be done to help maximize their situation. Okay, so, and there's an infinite amount of instruments, but these are the ones we're going to talk about. They're HSAs, which stands for Health Savings Account. Those are only free. They are pre-FIT and SIT, but you still have to pay FICA on them. 401k, simple, a traditional IRA, pre-FIT, pre-SIT, still got to pay FICA. Flex plan, pre-FIT, pre-SIT, no taxes, nothing, nada. Now, once you start marrying these, especially these different medical things, there's quite a few limitations, and that's beyond our scope. For example, you can't contribute to an HSA unless you have a high deductible medical plan. So, that's just kind of beyond our scope. But let's just kind of at least get the big picture.
In the flex plan, you have to spend HSA and rollover.
One more time.
In the flex plan, you have to spend those monies throughout that year, and the HSA rolls over your year.
Hugely important point. Thank you. A flex plan, the part that kind of catches people or catches people unawares, is if I choose $2,400 and I'm pulling out my $200 a month and I'm like, this is perfect. And then 6 months into the year, they quit prescribing medication, my rheumatoid arthritis is magically gone. Yay. Okay, that's great, but goodbye to $1,200 unless I'm like, oh, maybe I need to go get that bum molar taken care of. Or I'm going to get new glasses. Or I'm going to make a down payment on orthodontics for my kiddo. right? Otherwise you lose that money.
Who gets it? If we lose it, who gets?
The benefit management plan.
Okay, so like we just would make money off of that.
No.
Can you making your own,
Your own.
can you make your own payments to a fund?
The only way you can make payments to a flex is through an employer. Now, like for my self-employed clients, and there's some hoops they have to jump to, but I've helped them set up their own flex plans for, themselves so that they can take advantage of the same situation.
Okay, so this money is coming from the employer.
No, well, it can. No, that's not true. HSA money can come from either. That can be employee and or employer funded. Flex plans only come out of the employee's pocket, but there has to be an employer plan in place to do it.
Can you lose your own money?
Now, through lots of pressure, I think it's extended now something like 45 days after the end of the year.
Yeah.
So they'll, and they do a really good job of outreach, I'm in a flex plan, I've been in a flex plan forever. And in the old days, you could also run your daycare through here. And there was another $6,000 in addition to that $2,550. Well, I remember looking back on that, that was saving me $3,000 a year, and I had 2 little kids in daycare for years. No. Okay. But that's gone. The daycare flex is gone. Where was I going with this? Oh, so they'll tell you like in September, you've spent, $1,200 of your $2,400, you're off average per month, so it gives you time. If you don't have any medical or dental expenses, you can't create them. But a whole lot of people are like, I really need work on my teeth or my eyes or, God, it wouldn't suck to go to physical therapy for the pain I've been in. Those kinds of things. You can also do things now like get medically ordered massages, medically ordered cranial sacral therapy, acupuncture, herbalism. It's kind of expanding into more Eastern and natural meds too. So, think out of the box there. Okay, and I'm not going to do it right now because I really want to get into the tables, but we're going to do an example of how much these can save you in taxes. And it depends, of course, on how high your tax rate is. But everyone's going to save the same amount of FICA, but if you're high income and you're in one of those top tax brackets, it can save you really, quite a significant amount of money. Okay, let's see, what does this say? So cafeteria plans work a little bit differently. We have those at the university as well, and this is really kind of getting to be the, modality that a lot of people are working for, which is flexibility. We don't all need the same things. So, like the university, the legislature votes us X amount a year in benefit dollars. So I'm just making a number up. They say $8,000 a year. Well, say I'm covered under my husband's health plan. I don't want health insurance, but I do want life insurance and educational assistance and dental insurance and disability insurance and this whole other laundry list of things, right? Whereas you might be like, I just need to get health insurance, right? So it allows you to craft and spend, but whatever you don't spend, you just lose, right? Okay, and then this is what we were just talking about, health savings accounts. You have to have a high deductible health insurance plan. You can contribute annually. Oh, the other thing about HSAs that's kind of interesting is that, well, like I said down here, you've got to have quote unquote a high deductible plan, but they roll over from year to year.
Yeah,
so they're not use it or lose it.
Yeah, so you can accumulate in the health savings account. Somebody.
You can accumulate in the health savings account, and if you're one of those incredibly blessed people that actually have more money set aside for medical bills than you've got medical bills, you can actually, whenever you want, let me see if that's a true statement, at 59 and a half, convert that into an IRA.
Oh, wow. If I max it out,
Does it? Is there only,
$1,000.
really?
I don't know.
Honestly, I mean, just putting it all on the table, there is so much to this, a whole lot of the stuff I have to just look up and reacquaint myself. I mean, I've got 60 tax clients.
That might be wrong, maybe if you max the employee per year.
That actually sounds, because I've got people that have got HSAs that are 5 figures. Because they've been maxing it for a long time. And it's also a vehicle. I've got a couple high income people that they've maxed out the amount they can put in their IRA, and they want to continue to tax defer additional dollars. What do you do with that? Fund an HSA. So tax deferred retirement contributions. I've got 3 of those up there, 401k, simple, and traditional IRA. When I say traditional IRA, I mean one that runs through your company, an employer-sponsored plan. These are money set aside from current paychecks. The word tax deferred, can somebody define that for me? What does that mean?
Put it off, paying you don't pay taxes on it now, but you would pay on it in the future.
Right. I'm deferring. I'm pushing something into the future. So I've decided if I make $500 a week that I want to take 50 of that. And it's the same thing that I put here. You take the money, you give it to a trustee of some sort, right? And the trustee is going to invest it based on the directions I give him or her. And there's all sorts of different kinds of vehicles. Here at the university, after I think we've been with one company for 50 odd years, they just shifted. And there's been a ton of outcry because we no longer have a social choice mutual fund. And being educators, many of us choose to put our money in something that aligns with our social and environmental values, and that instrument is gone. So you can only invest in your 401k in things that your trustee has got pre-set up for you. So that's kind of a bummer. Pre-tax for FIT purposes, you still must withhold and match FICA. And the amounts are different. Your annual limits that you can put into these different instruments are different depending upon if you've reached the age of 50 or not. And can you look in your book on page 4-9? So IRAs are 5,500 and 6,500. Those are pretty, quote unquote, shallow caps. But I mean, 401ks are up around like 18, 19 grand or something. Do you see that?
So the 401k, 18 grand or 100% paying.
Okay, so if I make 6 grand, I can only put in 6. But obviously that takes me to 0. Simples, that's like 3% of your gross wages up to a certain amount, like 12 grand or something. 12.5. So you can see these are different limits. Now, if you have a really nice salary, or if you work in an urban area where everything's higher, lots of people come up against these limits. Here, most people aren't able to defer $18,500 of their annual income, but your goal is obviously to defer as much of it as you can. And again, you get a tax break today. All the interest and dividends grow tax-free. And then you pay your tax when? When you pull it out in retirement. A Roth IRA works exactly opposite. You don't get any tax benefits today, but when you pull it out, and then it grows tax-free. And when you pull out your principal in retirement, you don't pay tax on it. But you will pay tax on your interest and dividends when you pull it out in retirement, the portion attributable to interest and dividends.
And wouldn't the hope be that when you reach retirement that you're not in as high a tax? That's exactly
the theory. And for most people, that totally makes sense. Generally, and this is again not to be construed as advice, But normally, the only kinds of clients that I will recommend to set up Roths are people that have a business that they're going to sell when they retire, and pop them into a higher net worth category, or people that are fixing to inherit, or something unique is going to happen that they're going to be in a higher tax bracket in their retirement years than they are in their earning years. But that doesn't describe most people. Okay, we've talked about that. That's IRAs and Roths. Okay, here's the meat and potatoes. So if you could look, please, on page 4-11, we're going to look at a W-4. This is what you're going to fill out as an employee and give to your employer, and that's how he or she is going to determine how much to pull out of your paychecks, right? And most people, I should say most people, but a lot of people have filled out a number of these over the course of their lives and not really had any idea of exactly what they're doing or ramifications. And I see that every year at this time with tax clients. Like, I just got off the phone with a guy today, and he's like, oh my God, why are we getting so much back? Everybody else I know is owing. And I'm like, well, remember last year I told you to change your W-4 to decrease your number of exemptions so you had more taken out of your paychecks? Oh, yeah, I remember that. So how does it work? Everybody has a right to take themselves as an exemption. So if it was just you, yourself, and I, no kids, no nothing going on, you take one, okay? And in a perfect world where you just had one job and you didn't have anything else extraneous going on, like you owned a house and had a mortgage interest deduction, or you had a trust fund with 20 grand in it, or you had a rental over here, or, you know, all of a sudden your twins showed back up and became your dependents. If nothing weird happened and you didn't have more than one job, technically what was withheld from your paycheck should equal, you know, pretty darn close to what you owe, and you would have no refund or owe any money. But that really doesn't describe most people, does it? So on the whole, it says you should take one for yourself, one for anybody that's a dependent, and then there's this whole category of things, this last little bullet that says special withholding allowances. So if it's me and my one kiddo, and again, with not multiple jobs or anything, taking two, I should be pretty darn good, right? Although that's not true at all, because if I get earned income credit, you know, that's going to skew things all over the place. If I have big daycare bills, that's going to skew things all over the place. So, you know, in reality, everybody really should fill out, and most people probably haven't even turned it over, but on the back side of a W-4 is a whole worksheet that takes you through all these other weird things I'm sort of talking about, which aren't really weird at all. Which are items like, do you itemize your deductions? Do you have another job? Do you, or any other compensation, rental or interest or selling stocks and bonds, or a little side gig where you're self-employed and sell, you know, Merle Norman or Arbonne or something. Tax credits, do I get earned income credit? Do I get the child tax credit? Do I get the child and dependent care credit? This might all sound kind of like Greek to you, but you know, if you get any of these things, that's going to skew your W-4. This class isn't about telling you what to put on your W-4. It's telling you about what you have to do with it as an employer when you get it from them. Now, as somebody managing a business or running payroll, the last thing in the world you ever want to do is to advise anybody. Your employees will come to you, what should I do? Like, I'm getting divorced, and it's, you know, your answer is, I don't know. Call your tax advisor. Or do the worksheet. Because the minute you advise them, there's going to be something you didn't know, like, oh, her grandma claims her. She should be claiming 0 and is still going to owe at the end of the year. You know, you don't know her situation. And I will tell you, of all the things that I do from a consulting standpoint, this is the one that I'm like, if you ask me that question, I'll just tell you flat out, that's going to take $150 of my time to determine. Because I'm going to cross every T and dot every I. Because if you're trusting me enough to give you an answer, you're trying to maximize your monthly budget, your monthly take home without owing anything at the end of the year. The last thing I want to happen is we get to the end of the year and I'm like, oh, sorry, I miscalculated and you owe a couple grand, right? Because I didn't consider everything.
I want to consider everything, and I want to ask all the questions to make sure that I know how much you should be taking from your paychecks. And I will tell you, my nastiest surprises over the course of doing this for 25 years have been when I've screwed that up. Because this is really people's monthly budgets and it's their lives, right? Okay. I'm making myself sound really important, but mostly what I do is like, it's not like being a surgeon or something. But this is important because a lot of people live on really tight budgets and you're helping them try and manage that. Okay, so on the W-4 itself, here are the things you choose. Up at the top, and I don't have the numbers in front of me, so if somebody could help me, one of the line items is single, married, or married, but withhold at a higher rate. Line 3. So that's pretty self-explanatory. I'm single or I'm married, so that's one or the other. You would check married, but I want to withhold at a higher rate if what? Why would you possibly do that? Sorry? Yeah, if you, for example, have 2 jobs. Because if you have 2 jobs, and say you're making pretty low money at each of them, maybe you're making $250 a week at each of them. Each of them are going to take taxes out as if that was your sole source of income. But when you double those, all of a sudden you're in a higher tax bracket. So that might be definitely one of the reasons why you would do that. Or you've got some other income on the side. Okay? Now, note at the bottom, IRS doesn't pay interest on over withheld taxes. So, oh my God, I had to take out way too many taxes and I've got a $7,000 refund coming at the end of the year. And that's the other thing. If I screw up on that side of things, what have I done that's wrong for the client? They're not getting any interest on $7,000. They should be investing that in their IRA on a monthly basis, right? Okay. Oh, here's a picture right here. Okay. Single, married, withhold. Now, next one is this line 7. This is really, really important. This says, I claim exemption for withholding. Exemption means what? Don't take anything out at all. I claim an exemption from withholding if I meet both the following conditions. A, last year I had no tax liability. In other words, when they did my whole tax return, my tax liability was 0. And I anticipate the same this year. For many of you who are students, that's probably an accurate description. I've got a little side job. I make, $120 a week or something. I mean, you're students, you're not making much. You're not going to have a tax liability. There's no reason for them to take federal income tax out of your paycheck because that's money, A, you could have in your pocket this week, and B, then you're filing a tax return just to get back, $700 or something, and you're paying me $200 to do that. Well, that's stupid, right? So, but don't indicate this if you don't answer yes to both those bullets. Okay. You can't claim exempt, that thing we just looked at, if you're dependent on someone else's return. What does that mean?
Someone else's claimed you as a dependent.
Yeah. You're under 24 and you're a full-time student and your folks claim you. Or you're a qualifying relative for somebody else. Like you live with your niece and you don't make any money and she lets you live in one of the rooms of her house and you get free utilities and free internet and da-da-da-da-da and you buy your own food, you're actually her dependent. She gets to claim you on her tax return. So then you can't claim yourself. Okay. That just happened this morning with another client. It was kind of interesting. And it's just funny because he's a new client. I don't know that much about him. How you back into these things. His very last sentence in this long email was, oh yeah, and then do I have to declare my grandma pays me $200 a month in rent? And all of a sudden I'm like, tell me more about your grandma. Well, grandma's on disability and food stamps. All of a sudden we do all the math, grandma's a dependent. It bought him $1,211 of additional refund. He thinks I'm amazing. It's like, I'm not amazing. It's just tell me more about your grandma, right? And he's like, well, my guy at H&R Block didn't do that last year. Well, H&R Block guy's probably also a vacuum salesman. So, never advise employees how many to claim. Other situations, just really quickly, if they won't give you a W-4, I hire somebody, say, out of state, and I'm like, here, sign this, scan it, put an electronic signature, send it back. They don't. Bummer for them. I've got to withhold at the highest rate, single is 0. If somebody wants to change their W-4 and they give it to me, I've got to change it as an employer. I mean, I've got to go in the software and change it so that their withholding tables reflect it. If they lose the number of allowances, like, a divorce is finalized and I lose my 3 kids as dependents, they've only got 10 days to change their W-4. Okay. The only other thing before we dig into the numbers, if you've got other kinds of income like Social Security checks or pensions or, those are the biggies, annuity distributions, you want to fill out a W-4 that goes with that income. So if all of a sudden I'm done working and I'm like, I'm going to get $3,000 a month for my pension. Well, you're going to have to pay some tax on that. Do you want a tax bill at the end of the year in your retirement? Or would you rather get $2,730 a month? Right? So you need to fill out a W-4P telling them how much tax to take out of your pension. Social Security, same thing. If you get disability checks, sick pay. All right. Now, if you turn to table T as in Tom, please, we're going to take a look at how to use the tables. The first thing you'll notice is that there's 2 sets of tables. You're going to have to help me out again because I don't have my book up here. I think on page T4 starts your wage bracket tables. T5.
Yeah.
These are the easiest tables to use. T5, your wage bracket tables. And if you've got a pen or a pencil, highlight that because the wage brackets and the percentage of withholding are different tables. Okay, the wage bracket method is the easiest. And if you look at it, they've got a little box on each page. And the first page says this is to use for people that are paid weekly and are single, right? And then on the next page are the tables you use if you're weekly and you're married. And then the next page is if you're paid biweekly and you're single. And then biweekly and married and semi-monthly and single, and you get it. That's how it works. So let's just try one. Let's say, I think I've got some here. Okay, let me just finish this and then we'll try some. So always go to the wage bracket if you can, because those are just easy peasy. If you can read a table, you can pull a number, and that's the federal income tax code. All these numbers are obsolete due to the tax law change on December 6th. I just got my first paycheck after the tax law changed. And even though I do not believe at all that the tax code was a good idea, it didn't suck to see my paycheck. Although I did see, I shouldn't say this, but something online from a friend that I thought was kind of interesting. Like if you really don't believe in the tax cut changes, then here's a whole laundry list of organizations that you can give to that support things that are impacted by the tax changes. Mostly around social and human health and social services because those are cut really dramatically. So I'm going to have a talk tonight with my husband and see if maybe we want to participate a little bit in that. So, what was I going with? Okay, wage bracket. If the only time you're going to go off those, and go back to page T2 and T3, the percentage tables, is if you've got somebody highly compensated, which is about $80,000 a year and above, or if they're paid on some weird pay schedule, like twice a year, or daily, or something that's not in the wage bracket.
They actually have a daily wage for wage bracket.
Oh, they do? So it's like annually or semi-annually? I've never seen that. The only time I go there is for highly compensated people. Okay. So here's what you need to know to use the tables from the W-4. And it's right on the W-4. Are you single or married? How many allowances do you have? Those are the 2 pieces of information you can the W-4, and then I'm processing payroll, so I know how often I'm paying you and what your gross pay is. So let's try some examples. Nani's annual salary is $40,144. She's paid biweekly. How many times a year is that? 26. And her W-4 says M4, married with 4. How much is her FIT withholding for one paycheck? And she has no tax deferred contributions. How much is her FIT from one paycheck? You can't go to the tables till you figure out what?
Gross pay.
Yeah, how much is a paycheck?
When we're doing the homework, we don't have to show calculations to do that.
There's nothing to show. Now, let's see, my glasses.
They're on your head.
Thank you, I had just a brief moment of panic, so they were not either of the two places they should have done. Golly. Okay, using that same table for married and biweekly, what would you choose if she had 2 allowances and she grossed exactly $880? It's actually the 25. So if she made exactly $880, if you go all the way up to the top of the column headings and read it, it says, if she, I read it from the top of the column now, if she made at least $880, but no more than, whatever it says, $890, 900, then it's $25. See what I'm saying? Because it looks like you could choose between 23 and 25, but you can't. Because at the top of the column, it guides you on how to read the table.
It has to be.
At least 880. Now, do the same gal, but I'm going to give you some information about her HSA and her 401k. I want to know how much FIT to withhold and FICA to withhold on this person, paid biweekly. She puts away the 5% of her gross into her 401k. Her employer matches, and she puts away $50 a paycheck into her HSA. I want 2 numbers now, please. I want you to calculate her FIT and her FICA for this, just this one paycheck. Yes, ma'am. So the first thing we need to figure out is how much of her paycheck we think is going into the 401k. That's not on here, that's on the board of information up there. 5% of her gross goes under the 401k. And we're just doing one paycheck. But I want you, oops, sorry.
Because you're getting all the answers the right way, which is not just like this. I didn't want you to see that. The first thing is you've got to come into that. Right, I know, but you see what I mean? So start from that. You're trying to figure out, so how much from one paycheck is she really
And then
divide? You're going to divide it? Right, right, well. That's what she's doing, taken out in a year. So how are you going to convert that to one paycheck? Yeah. So I think, you'd be best off if you were like keeping them in your notes, like saying, process. Yeah. And then you got to kind of spread out here. So start with gross pay. For one paycheck. So how much is the gross for one paycheck? Yeah, and then take out the 401k and the HSA, because those are both pre-tax. And then you gotta figure out whether or not you think the employer match goes in there or not. $50 per check for HSA. Per check. So that's, I'm not sure that you need to know the annual amount for that. Because we're just looking at one check, right?
So there's a couple questions here.
Yeah, okay, check.
Yeah, and that's how you do an HSA contribution. 401ks, you also could do a flat amount, but most people will do a percentage of salary. So, simple, just 5% of this number, 77. What do we do with the employer match? Is that taxable wages? No, so that makes it like a huge benefit, doesn't it? And I know I've said this before, but it bears repeating. If you have an employer match, beg, borrow, or steal, not really steal, but to make the maximum match, to make the maximum contribution that you get a match, and you're just leaving free cash on the table, and that is just crazy making. So it's not taxable, it accrues tax-free, and, it's money you wouldn't have if you don't contribute. Okay, so enough of that, minus 50, so minus 127, so we've got 1680, I think, is that right? 1460. Okay, so you just take that to the tables. So my FIT according to the tables is what? So I just saved $14 in tax, right? Off of this. So basically, the government just put away a third of my HSA money. Nice. And I'm also going to save some money on my SIP. So they basically probably did just about fund a third of my HSA. What do I calculate the FICA on? 1544. And what was that?
112.71.
The only way to save money on FICA is through a class. And you can't do that on your own, they either have it or they don't. Okay, let's try the next one. Okay, let's see what happens with John. John earns an annual salary of $84,400. He's paid bi-weekly. His W-4 shows married with 2. What's his FIT withholding? That's the first thing you notice.
It's not on the table.
It's not on the table, so let's do this together. If you divide 84.4 by 26, and you go to the bi-weekly and married table, which I think we were just on,
Right.
you go all the way to the bottom, and it's like, they're highly compensated. They tell you to go to the percentage of withholding tables, right? Okay, so here I am. The first thing, make sure you understand this, before you can go to the actual tables on page T3, you have to start on page T2. What does T2 tell you to do?
Take withholding out of the
They tell you that before you can go to the tables, you've got to subtract the withholding allowances. And it's different for how often you're paid, right? And that's a per withholding allowance subtraction. So on page T2, how often am I paid? Bi-weekly. So how much do I get to subtract for each withholding allowance?
155 to 80 for each allowance.
For each allowance. So multiply that by 2 and get me the number that I'm taking to the tables. I think that's correct. I'm starting with a gross of 3246.15. I've got 2 allowances. If I didn't have any allowances, it would be 0. If I had 10, I wouldn't have any tax because they'd all be eaten up. I get the most of them. Okay, now you're going over to the tables on page T3. And the first thing you have to do is determine which table, and we're in table what?
Table 2.
2A or 2B?
B.
Table 2B. And so I'm just going to read to you, and then we're going to write our formula. It says, if the amount after you subtract withholding allowances, and our number is between 1,050 and 3,252, right? So it tells you, and I'm going to write this on the board, it's an algebraic statement, I'm going to kind of write it while I read it. It says, if it's between these two numbers, your FIT is going to be equal to $71.70,
Yes.
right? Plus 15% of the excess over, well, the excess over what?
1,050.
Yeah, sorry. Yeah, they give you this number. And that number I just calculated here goes in here. So do this, solve for this part of the equation and then add it to 7170. So really the most important part here, you guys, is to write this full formula out. I do not want you, even if you know you can do it, to solve it on your calculator. I want you to write it out. There's a pedagogical reinforcement process that goes on there that's really important.
So solving things through tables are sometimes difficult for people. I find that if I verbalize it and just read what the table says, when you get the amount minus the withholding allowance table is between such and such, then your tax is equal 7170 plus 15% of the amount over, and then they give you that number. Really, the only thing you've got to plug in is the excess of what? Well, it's the excess of the number I just solved for. Okay, let's throw a wrench in there. Same scenario, except for this person maximizes his FSA contribution. Everything else I'm going to have to give you an amount, but with FSA, I can just say maximize his contribution, because that's an amount the IRS gives us every year. And this year I gave you the number we're using. And you know how many pay periods he has. I'm going to look up a couple of these questions I have while you guys are working.
What is the number for that?
I'm sorry, one more time.
What's the number for that?
I think the slide said
It was 25.
2550.
So on the homework for FICA, do we have to actually create it as
I would, yeah.
So if we actually plug the formulas into the cells, we don't have to show what.
No, but I advise, are you talking about for your homework? Yeah, let me just show you what I did. Say I've got a formula in here. Right? And then I've got OASDI. Let's actually make this a big number. And let's say they're capping on this one. You with me? And so I'm going to have a pretty sophisticated formula in here. Let's say, you know, I mean, not sophisticated, but are we using 127.2 in this class? Honestly, between two classes and the wrong tax changes and
Did you change it in the class? Do you have a new one?
Tax counties have to.
I did. Okay, say, whatever, I mean, I'm just making something up. I'm gonna go down here, and at least I do, and this is just from when we used to make actual handwritten working papers that we had to keep in tax files or client files for whatever. I would show my calculation. You know what I mean?
So then really, you don't really have to do show the calculated number.
You know, just so that I can see, I can go down here and see exactly what it was, you know, that I did. Okay, let's try this example that we're doing here. What is this guy? What's his gross again? Sorry.
3246.15.
And let's just make all these bigger so that we can see them. And then how much did he put into his FSA? Oh, $98, right?
Yeah.
Yeah, so go like that. No. So when you go to get his taxes to take him to the tables, you're starting with this number, right? And then you're going to take out the exact same things we just did. What's the first thing you need to subtract?
The 155.80 times 2.
Yeah, subtract the allowances. And so now this is the number that you're actually taking to the tables, right? So now I'm in the tables, and let's just say this out loud. FIT equals
770. 15% of 2,836.47.
right, so you can see it. And so what does my FIT actually equal then?
$339.67.
Okay,
So you save about $15 doing it that way.
$15 doing it that way. All right, Maggie earns an annual salary of $336. She's paid monthly. Her W-4 shows married with 2. What is her FIT withholding?
Sorry, can I ask a question on that
Sure.
one?
On the Excel spreadsheet?
Yeah.
Yeah. Go ahead.
Is it the 2836.47 in the tables? The wage bracket tables?
Oh, is it? Okay.
I think so, unless I did something wrong.
Okay.
Oh, it should be, yeah.
Okay. So for those of you that are listening online, a really good point was made. Now that she's got, she was right on the cusp. Once she made her, or once he made his flexible spending account, what does it show us in the, really? Is that big of a difference? Okay, wait. So this is, no, wait. Sorry. This is the number you take to the tables.
Oh, you don't take the allowance?
No, you only take the allowances off when you're going to the percentage of withholding. The allowances are built into the wage brackets.
Oh, okay.
Okay. Yeah. So this is the one we're working on. So here's the number going to the tables, right?
But this time we're in table 4B. On page T3. First step, you've always got to figure out the gross. If they've got an HSA, or a 401k, or an FSA, subtract that next. Then, go to the wage brackets. Oh my goodness, easy peasy, pick it up. Or, oh darn, they're too high, I've got to go to percentage. So you want to write those steps down, that might be beneficial. Like for me, I'm a flowchart kind of person. You know, so step 1, get the gross. Step 2, subtract any pre-tax savings. I have got to give you either percentage or absolute dollar amount for everything other than FSA. So otherwise, how would you know? So subtract that. Number 3, go to wage bracket tables. But I can tell you around 80 grand they change. You can use wage bracket to do it. Otherwise, step 4, go to percentage of withholding. Step 4A, subtract withholding allowances. Step 4B, calculate the amount for the appropriate table on page T3. Side. Or, if you're processing payroll software, input the W-4.
Input a
And
number.
it goes whoop.
I actually had somebody today who was talking about payroll accounting who had not taken it yet. And they're like, well, what's the point? Isn't there all the software out there anyway? And I was like, right, but we have to learn the reason behind the software. I'm like, it's kind of like regular accounting. I mean,
Or it's like, you know what they're talking about now that's just mind-blowing for anybody who's, I've spoken or speak a little bit of a number of other languages, is they're talking about now that we're going to have technology where we all are going to put on headphones and you're speaking Arabic and I'm speaking French and it auto translates and guess what we're going to ask you to do?
more than the language.
Right. It's so sad. It's like nobody can do mental math anymore. I mean, nobody. Really, it's like, what's 10% of 10 grand and 30 people get out their calculator? It's like, oh my God, it's $1,000. Anyway.
Have a great weekend. Do your homework.
No problem.
Let me just make sure that there's nothing crazy in there that I haven't gone over.